This weekend, I was watching one of my favorite podcast YouTube channels, and it gave me an investing idea. Now, this channel isn't something I normally watch specifically for investing. They cover all kinds of different topics. It's the All In podcast. You may be familiar with it. If you're not, it has four best friends that are really incredible hosts that get on a Zoom call together, and they talk politics, they talk business, they talk the stock market, venture capital investing, all kinds of different topics. And I watch it because it gives me a better sense of what's going on around the country, around the world. It gives me different perspectives that aren't necessarily the same opinions that I hear, in my circle. And so I really value their podcast. I'll put a link in the description in case you haven't seen them before. You really owe it to yourself to watch one or two episodes and kind of get a feel for it and decide if it's something you're interested in, because I find a lot of value in it. It's a weekly podcast, and on this past episode, they were talking a lot more politics than usual because of the situation going on with the Ukraine and Russia right now. It's on everyone's mind, and they were talking about that. And one of the topics that came up, that often comes up, is the idea of being energy independent. And so they were talking about, when are we as a country going to say that's enough? We're going to be energy independent, and what are we going to do to get there? One of the four guys is Chamath Palihapitiya, and he brought out the idea that if we are really getting serious about being energy independent in a way that everyone can be on board, the fastest, cheapest, most agreeable way to do this is with solar. And solar really is a viable option at this point, and we could ramp it extremely fast, and it would be very affordable. And he started throwing out the idea. President Biden was going to suggest doing this $3 trillion Build Back Better plan, and why not take that amount of money and say, how far would that get us? Could we solarize all of America with that amount of money? And they started doing some quick and dirty math and taking 85 million freestanding homes in the United States and saying, if each one of those costs $30,000 to put a solar roof system on, that would be $2.5 trillion. That would be under the $3 trillion that we were talking about possibly spending in the Build Back Better plan. And if you did that, how much more do we need beyond that? That's a huge movement towards being energy independent. Now, being a realist and being, with all things government related, kind of a skeptic and a cynic, I don't really see our federal government doing something that effective and that inexpensive, but the idea got me thinking, and I really can see the idea there that that's something everyone could get behind, is moving towards solar in a way that's really going to gradually change us to where we are more energy independent and energy abundant in our society. And so wouldn't I like to be getting into stocks that would benefit if that's the direction that we go as a society? As an investor, I want to invest in companies that are good and solid and strong and earning money, but I also want to invest in things that are going to be a movement of the future that possibly I could ride a tailwind that's going to carry for years to come. And so if solar is going to be a movement, I really strongly believe in the electric vehicle movement, and that's just going to dovetail right alongside the electric vehicle revolution that we're beginning and we're going to go through. So wouldn't solar be a natural fit for a movement that's going to come at some point in our society. So after considering Chamath's idea and just really thinking about it, I decided to sell all my portfolio and go in. No, I'm just kidding. I don't invest like that, and I hope that you don't either. But what I thought would be helpful is to talk about when I have an investing idea like that, when I hear something or see something that someone else is talking about that indicates to me that there might be something there worth investing in, is the thought process and the habit of what do you do now? Do you just go buy the first solar stock company that you find out about? Do you just go invest in a solar ETF? What do you do? Now, I have invested in alternative energy companies in the past, but it's been a long time. And currently in my stock portfolio, the only company that has any exposure to that is Tesla. Now, Tesla is my largest position, and solar is a part of what Tesla does. But if I'm being honest, that's not really a needle mover for the stock. And although I'm happy Tesla is doing solar, I don't see it as their main focus at all. And I don't really see it becoming their main focus for years to come. So if I'm going to be exposed to a solar revolution that's coming sometime in the near term, the next few years, I'd really have to look at investing in something else. And so what I want to do is start with a short list, and I want to examine if I'm going to pick a winner, which one would that be? It's time for me to do some research and refresh my knowledge of alternative energy companies and specifically solar. Remember, I haven't even decided that I'm 100% going to put any money into solar right now. I'm just going to begin going through the process of considering the idea and doing some research to find out if I were going to, which is the best stock that I could invest in to benefit from that kind of movement. So I'll take a moment and mention at this point that part of my mindset in investing is I want to pick the one winner, the best stock to accomplish a specific purpose. So when I see a trend or a movement like this, I don't want to go buy 3, 5, 8, 10 different stocks that are in that industry. My portfolio is supposed to be hyper focused on particular stocks, and I don't want to have to track 7 different solar stocks to find out how they're doing, keep track of them, and make decisions on them. I want to pick the winner. I want to pick the one that to me seems like it has the most to benefit and the least to lose, and then I have one champion for that industry. I'll give you a simple example of how I use this to benefit my portfolio in a couple ways. Going back to the middle of 2020, all of the restaurant stocks were being crushed. All the different restaurant chains were being just demolished in the stock market. Now, some of the restaurant chains were doing fine. A lot of them were struggling. And I knew I wanted to invest in the restaurant industry because obviously, even though their stock prices were getting slashed, some of them would survive. Some of them would succeed. And even though some of them might go bankrupt, others would benefit and others would come back and we could see explosive growth. So a lot of different people would have invested in a bunch of different restaurant stocks. What I did was I lined up, I think it was about 8 to 10 different stocks, different stock tickers. The restaurant industry has several different combination tickers where you have several different chains of restaurants under one ticker symbol because it's one parent company. And I analyzed all of those and I picked the best one I could find. So in that particular situation, it was July of 2020, I chose Chuy's restaurant. So if you're not familiar with Chuy's restaurant, the ticker symbol is CHUY, and it's a Mexican restaurant chain. And analyzing all the different fundamentals and the technicals, I decided that the Chewy stock was down more than it should have been. It was in a great situation financially compared to most of them. The restaurant industry is notoriously heavy on debt. Chewy's was very low on debt, and I felt like it had the most upside potential with the least downside risk. And so I began buying it in July of 2020 at a price of $14.19. And I built up a position somewhere around 5% of my portfolio very quickly. And I wanted to ride that momentum as we came out of the pandemic and things opened back up and restaurants were fully operational again. Now, as we know, fast forward a year and a half, and we're still hoping one day to kind of look in our rearview mirror at the pandemic. It still has different consequences going on. And I've sold over time, I've sold my Chewy position a little bit here and a little bit there. My main two transactions to sell were in February of 2021. I sold at $41.84. Okay, so remember buying at $14 a share and able to cash out the majority of my position at $41 plus. And then finally last month in January of 2022, I closed out my last position at $25.49. So not as much profit there, but really what happened there was I wasn't sure exactly what was going to happen with the pandemic, and I sold most of my position in the 40s, which was fantastic. But I really like Chewy, the company. I really feel like it's a good, solid company that I was happy to hold long term, and I believe it will come back higher again. But in January, I was looking to raise more capital for better situations, better stock opportunities, and I really felt like selling that position in what I had left in Chewy was worth it. But you see, by picking just one winner, I was able to succeed, and I was also able to be focused. It makes my research and keeping up with my companies very simple compared to if I had a whole basket of restaurant chains. I would have to make different decisions depending on which ones were doing well, and when do I want to be completely out of it. By picking just one company that I believe in, it made my investing so much simpler. So that's what I would like to do if I'm going to do some kind of trade and investing in the solar industry. And so I began by creating a short list of the companies that I know I'm interested in just by a cursory glance through the different apps and the different websites that I follow stocks in. And so here are a handful of tickers that I know I want to research. Now you'll notice that it also includes one ETF, and I don't like to do the ETFs because again, I want to pick the champion. I want to pick the best. The only time I usually would go with an ETF is if after spending time on research, I really can't make a decision because I don't know enough about the industry, and I just really believe strongly that the industry as a whole is going to benefit. So I'm going to save you the annoyance of watching me research, but I will mention that I don't pay for any of my services that I use to research. I'm sure there's some great paid products and services out there, but to me, I'm able to find the answers to my investing questions for free. And so that's what I choose to do. I'd rather spend any money that I was going to spend on research products or premium subscriptions to be able to invest more. You can see I use sites like finviz.com, seekingalpha.com. I have multiple brokerage accounts that offer different research tools as well. So I'll use Robinhood or M1 Finance for the different news and articles related to my stocks. And I find Webull to be super handy for looking at price charts. There are also several apps that I use, again, just the free version, that also contribute to the knowledge that I'm trying to gain. I use the Android app called Stock Events, This is very helpful for tracking earnings. The Hungry Bull app, which features earnings calls and market news, and then Investors Business Daily, is also helpful. All of those resources help me in the selection process, but then you should also really take the time, if you're investing in a small number of companies, when you choose one that you really want to invest in, to find their investor relations section of their company's website. This will give you a much deeper level of understanding on that particular company. All right, so yesterday I did my research and I decided I was going to sleep on it and kind of reflect on what I learned. And I've decided to give you the results today out at a park because it is gorgeous and sunny outside, and I'm doing a video about solar, so it just makes sense. So I apologize if the sound is inadequate. Now, anytime I research many different stocks like this, I really hope to come out with one clear winner. In this case, I have mixed feelings. So I'm going to give you some of my highlight thoughts. So the first company I looked at was ENPH, Enphase Energy. This is a $21 billion company, so it's one of the larger companies in the solar industry, and they have a great growth story. If you look at their growth in sales and profit over the last 5 years, very solid numbers, coming in at the 20 to 30% range. And they're also expected to have very solid growth in the future. You're going to find, if you look into these solar stocks, that many of them are very choppy. They'll have a great year and then they'll kind of regress a little bit, or maybe they plateau for a couple years. In this case, Enphase has had very strong numbers year after year after year, and that's a big deal. One of their metrics that I think was really encouraging is their profitability. Their return on capital is at around 12%, and in this industry in particular, there are a lot of companies that are hovering in the low single digits. Another thing that I really like about Enphase is it offers an end-to-end solution, and it's got a very global footprint. They have over 130 different countries that they work in right now. So the only thing that keeps me from picking Enphase as my particular champion for the solar play is it's still extremely high. The prices come down quite a bit, but when you look at standard measurements like price to sales or price to earnings, they're still very, very expensive. And so that gives me some hesitation. The next company I looked at was ticker symbol CSIQ, and that's Canadian Solar. Canadian Solar is about a $2 billion market cap company. It is, of course, a Canadian company, and that's a positive in my books because I'm a Canadian. I live in America but was born a Canadian, and I enjoy investing in Canadian companies when it makes sense. Canadian Solar is also global, serving about 150 different companies, so that's a positive. And it has a cheaper price to sales and price to earnings than Enphase. The one major negative that I see is it seems like their growth has plateaued for the last 2 or 3 years, and that causes me concern, and I don't know enough about why that would be to be able to assess whether that is a short-term thing or a long-term trend. The next company I looked at is called Solar Edge Technologies, ticker symbol SEDG, and this is a $16 billion company that is headquartered in Israel. In their case, their fundamentals look good. They look pretty similar in some ways to Enphase, maybe priced a little bit lower. And at the end of the day, if things are fairly comparable, I would just rather go with an American or a Canadian company if I have the choice. And there's not a huge differentiator that really signals to me that I would rather go with Solar Edge. One thing is looking at the price chart, their price hasn't dropped nearly as much as the others, so that's a negative. And then the other thing is, I don't know enough about the industry to be able to decide from their description of their business how fully integrated they are from end to end. That's one thing I really like about the first two companies, that some of the other companies, they describe a lot of the different things that they do, but they don't tell you what they don't do. And it's hard to tell without really knowing the solar industry in depth, what's missing, what parts of the process are they not a part of, and what could be an issue that the others will succeed at that they may not. The next company that I looked at is called First Solar, ticker symbol FSLR, and it's an $8 billion company, and its metrics look like a better value, which is great, but the growth story looks choppy and unpredictable. And they actually have earnings after market close today, so I'm going to reserve my judgment. I'll review it again probably tonight or tomorrow and watch it over the next few days. This is going to be one that I add to my watch list. All right, number 5 is Solar Winds, ticker symbol SWI, which is a $2 billion company. And looking at this one, it seems like it's much more focused on the IT side, the technology and software side, not so much the actual creation of the whole solar system. I could be wrong on that, but just going off their own description of their company, it doesn't sound like an end-to-end solution, which I think I've decided at this point is something I'd really like. Finally, to finish my list, the ETF TAN, which is the solar ETF. In looking at it, it holds several of the companies that I've talked about already and several others. So I'm going to talk about 2 others that I discovered along the way thanks to looking at TAN. But I've made the decision that I don't want to invest in TAN in the ETF, partly because their expense ratio, which I always hate to pay an expense ratio for a manager to be able to pick stocks that I could just buy individually on my own. The expense ratio is not absurd. It's only 0.66%, but why would I pay that if I'm also going to end up having companies that I'm not very excited about owning as part of that ETF? So I researched 2 other companies, the first being Nova, which stands for Sunnova Energy International, which is a $2 billion company, which looks interesting at first glance, but it is not a profitable company. And although that's not necessarily going to stop me from investing in a stock, to be able to look at other companies that are in the same industry, that are further along, that have the same market cap, why would I choose to invest in an unprofitable company unless there was a huge reason to the upside? All right, this last company, I don't even know how to say the name properly. The ticker symbol is DQ, and it's Daqo New Energy Corporation. And it's a $3.5 billion company. And here's the thing about this company. Its fundamentals look way too good. Like, it is crazy. The price to earnings, the price to sales, the growth is just very suspicious looking to me. And then I realized it's a Chinese company, which just makes it uninvestable for me. Not because it's Chinese, but because the metrics, the fundamentals, the measurements are just so good, it's hard to believe. And then on top of it, it's a Chinese stock, which if you've never invested in Chinese stocks, they can be fantastic. Some of them are run very, very well, highly profitable businesses. But then you also have situations where sometimes those companies don't end up reporting facts, and they end up getting punished in the long run, and you never know which company that's going to happen with because it's hard to regulate that kind of thing. So after all this research, I've decided I'm going to keep Enphase and First Solar on my watch list. I'm going to monitor them very closely over the next few weeks. And the good thing about doing this research now is that if I see the trend really start to pick up, if, for example, the president gives a State of the Union address tonight and he starts to talk about solar energy or that kind of thing, I know which direction I want to go. I know better now what I want to invest in and what I don't want to invest in. Do you have a different choice on alternative energy? Do you have a different company that you invest in? Do you have a different favorite solar stock? I'd love to hear about it. Tell me why your company is better than one of the two that I chose, Enphase or First Solar, as my possible champions for the solar trade. Wherever you're watching this, I hope it's sunny, and I hope you have a great day.